What's going on, everybody? It's your boy C-Zar, and we are talking about CRV Curve DAO today. Hit that like button, subscribe if you want to see more content like this, and let's get into it, my friends. Curve CRV here on this, the third day of September. We've got about like 22 and a half hours left in this day here. 4 days, 22 and a half hours left in the week. If we're looking at this from an all-time history perspective, you do have a kind of interesting chart, I would say, right? It seems as though, from last cycle, from November or October of 2020, going into the cycle peak there, you did have a very nice run, right? What was that? 33 cents all the way up to, I mean, hell, man, that was good. Was that like a 20x? Nice little 20x to end the cycle there, almost. Yeah, 20.4x. Nice. Um, you're back at those same areas now, right, at these low points over here. I would think that by the end of this cycle, this thing could definitely see higher prices. I know that there's been some mishaps this cycle. Some different things have happened. I'm pretty sure some negative things. Curve, I forget if there was a hack or if there was some kind of issue with the supply, but they fixed it. Whatever it was. CRV market cap is 1 billion. Volume is 123 million. That's not bad. That's really not bad at all. And $1 billion, for it being your second bull cycle, technically, you could see this thing do a lot, right? It could see a $20 billion market cap by the end of the cycle, which would be a 20x from its current price. It could see a $40 billion market cap, a $50 billion. It could even go to 100 billion or more. I mean, technically, second bull cycle status is enough, in my opinion, to have 100x capabilities, or at least $100 billion market cap capabilities. But maybe not this cycle. Maybe that's stuff that's reserved for next cycle, if at all, right? I would think for now, stick to something that's very attainable, which is that like 20 to 60 billion dollar market cap area. So that's a 20 to 60x from here would be my expectation. Okay, by the end of the cycle. I didn't mean to do this. Normally I talk about the short stuff. We work our way up to the long term stuff, but hell, let's do it. 20 to 60x from here. Let me put it right at the right area here. And hold on, let me talk to my wife real quick. All right, so 75.8 cents now. If we're looking at this, what was it? I was at a 20 to a 60x, right? So let's just put those lines up there for now. We'll probably come back to it, but I want to just see 20x is basically right there. That's a 19.7x. It's pretty damn close. Call it good enough. Put that line a little bit above there. 20x potential, and then 60x potential would be all the way up here. You could go higher. I do believe that curve could go higher. Now that we have that, I just want to see, right? And again, I'm judging this because typically whenever you maintain, and you have maintained throughout this whole cycle, about a $1 billion market cap, you've maintained your spot in the top 100 basically this whole cycle. Stuff like this, whenever alt season really kicks off, you do see those valuations of 20 to 60, $80 billion even. And for your second cycle, even above $100 billion is possible. So just running off of the market cap strictly, not even doing TA on it, right? This is based on my experience in the crypto markets. It's my third bull run. I've seen it happen. Well, this will be the third time if it does happen. But high to low, I think it will happen. I very much do believe that we're in a bull market. But high to low, if I'm being honest, that seems like too low of targets. Maybe you do see something that's a little bit higher. Maybe you see a 70 to $80 billion market cap, and you do go, because that golden ratio all the way up there, man, it's $64. I could really see you hitting that, right? In my opinion, it'd be more likely that you stop at 18 to $35. And if not, if you don't stop at 35, man, I doubt that you stop at a $60 billion valuation. You probably go a little bit higher to that $65 area, which would be a total market cap of, it's about an $87 billion. I could see it happening, man. I mean, that's pushing the limits. But again, for something that's maintained a $1 billion market cap and gone through some trials and tribulations tribulations. Is it trials and tribulations? Tribulations. I don't know. Trials and tribulations. It's gone through some rough times, especially even recently. I think that you've got a lot of potential to grow, right? Because you've maintained relevance. Even with the hard times, you've maintained relevance, and that says something. A lot of people cut and run in the hard times here. It's hard to dig yourself out of the hole and come back out on top, and I think that they're doing that. Anyways, long term stuff set aside. Let's look at the short term stuff here. Okay, I like what you're doing. I like where you're at. This, to me, it seems as though you found your low, and that's really why I wanted to talk about the stakes. I know a lot of people like Curve. I know there's some people on the channel that really like Curve. We are at the golden ratio zone now. It's a very nice look on the weekly so far. We could come down lower. And if we go down to this golden ratio at about 69 cents, wouldn't that be a perfect serendipitous area to find support? 69 cents, the crypto industry is hilarious. Although, in all fairness, we have not found significance on that area at all before, so maybe not. But it is the golden ratio. It is the golden ratio in all fairness from this high to low. Let's take this low to high and see what we come up with. We're right at the 382. I mean, it's perfect, man. It literally, this is exactly the kind of support you would expect, especially after a strong move. You look to find support at the 382, right? That's pretty damn common. It looks perfect. That to me is justifiable as a low. We look at this high to low over here. A little bit lower in that case, maybe 68 cents. And if we are to go lower, that's fine. But I'm not completely convinced. Weekly time frame, the weekly RSI looks phenomenal. The weekly RSI looks really phenomenal, actually. And the stochastics might be turning up here. You're in a bit of a trend as well. The MACD is right at an area where you might expect them to bounce, but if it crosses, again, you could come down a little bit. There's that. There's some iffiness in this time frame, but overall, I would say it's more bullish than bearish. If we're looking at the daily time frame, rejecting that oversold zone is not a good look. So close today green. If you close today red, if you close today red, the 3rd of September, today closes red, your odds of going below this low go up. How much do they go up? They go up probably a good bit. I would say right now, I'm pretty convinced that that's your low. But if you close today red, your odds I think would be like 80% or 70% chance that you go below that low. So you need to continue here, right? That was a proper reaction from your low to here, but you need to continue. I like that today's starting off red because it gives you a chance to leave a wick behind to continue higher. It's kind of like a superstition I have. You do have bullish divergence on the MACD. I love to see it. Love to see it. No bullish divergence on the stochastics, and right now it looks like a rejection. That's why we need that day to close green so we don't get the rejection. We persist higher and get out of the oversold zone. You know, not financial advice, not a financial advisor, but there are going to be, I believe the majority of coins between now and the next couple of weeks are going to move down and be stagnant, but there are going to be a handful of coins that pop off that do well for like a day or two or a week or two. Kronos was one of them. Pith did well. Chainlink for a second there. You know, like everything's going to kind of take its turn. Maybe not everything, but just let's call them distractions. I could see CRV being one of those distractions. A good distraction. Long term it's going up, but perhaps, you know, what it does is while the rest of the market's being boring or chilling, this thing goes up some, pumps up, and then it comes down and corrects. Causes people who are in projects that are going down to sell their losses, buy something at the high, and then it corrects. And then the ones that they sold go up. It just rinse and repeat, man. It's brutal. It's brutal, these markets, man. But I wouldn't be surprised if he did move up. I like the daily indicators enough, but looking at them, I'm not completely convinced. Today needs to close green. Let's look at the 1 hour time frame, and then we'll zoom out a little bit and wrap this video up. Okay. I don't like the 1 hour RSI, for being fair. And I don't like the stochastics. The MACD's all right, but it's about to turn not all right. So bad, fragile. I don't like your chances. You probably come down. You probably do come down. Some weird price action. Weird. Granted, that's some weird price action you had yesterday, but whatever. 4 hour time frame here. Also looks bad. Yeah, it also does look bad. If you look at this bullish divergence, you're thinking, what about the bullish divergence? Well, your wick, you already cleared out that divergence. You've had your move. That was your move up for that divergence. Really what you have is higher highs here with lower highs here. That's not a good look, and you're just finding resistance at the same area. Same thing on the stochastics. You can't even get overbought on your stochastics, which maybe doesn't matter as much because you're kind of moving sideways. These indicators are less reliable when you move sideways. Not the RSI is less reliable too, but it's more reliable than these two, I would say. I'm not impressed by the MACD. All right, so maybe I was wrong. You know, maybe I was wrong to think that this is the low. Maybe we do go a little bit lower, but we're very near the end. We've I don't know what that was. Hold on. Wife got attacked by a mosquito. Anyways, looking at this here, you can see that it's tightening. It's definitely tightening. And as we tighten up, we're getting to the end of this range. I would think that either by the end of this week or sometime next week we find resolution. So maybe we do go a little bit lower. But man, if that's the low, I wouldn't be surprised. Like, I really wouldn't be surprised. I suppose I'm taking back that call now. Maybe you go, just looking at this from a low to a high, maybe you do go down to 68 cents, 64 cents, somewhere in that area. But that's okay. That's fine. You know, it's either here or there, but it's very, very near. You're not going to go through anything terrible. And then your reaction afterwards is going to be very positive. So let's talk about what's going to happen afterwards. Right? We've talked about the end game. We've talked about your potential for the end of this cycle and where I think you're going to go. But let's talk about where you're going to go between now and like the end of October, your next move. And this is where I think curve is kind of interesting, because not financial advice, not a financial advisor, but if you snag along on this thing at the right position, you can really amplify your gains and minimize your risk. You know, if this thing goes to a 68 to 64 cent price, that's about a 16% drop at 64 cents. 68 cents is about a 10% drop. If you wait like 10 to 15% of a drop and you snag along down at those areas with some tight stop losses, okay, depending on what leverage you use, I wouldn't, I mean, not financial advice, not a financial advisor, I wouldn't use more than a 5x leverage. If you're using 10x, whatever, you know, but just you're going to have to set those stop losses tighter, right? Really make sure that you've got an edge and you're capitalizing on that. The only reason, I don't ever talk about leverage as like a viable option, but the reason why I actually think it might be a viable option for this is you could really amplify those gains hardcore, man. And of course, that's what leverage is meant for, but if you're looking at this from like a 64 cent, let's say it goes to 68 cents, okay, and you do a 5x leverage and it drops to 64 cents, right? 5x times 5%, that's a 25% loss. That's a little bit what's the word I want to look for that I'm using? It's a little bit much. It's a little bit too much. It's a little bit risky there. So maybe a 3x leverage wouldn't be bad. 3x is 15%. I don't know. Maybe wait for it to come back up. Don't try to catch it on the way down. Maybe more try to catch it on the way up. But regardless, if you do a 3x to a 5x long, where this is going to go, I think by the end of by the end of October would be anything from about a 360% growth to a 550% growth. So if you're doing a 3x, that turns that move into basically a 10x for you overall, right? If you're doing a 3x at a maximum, that would turn this move into like a 15x overall for you, which really amplifies those gains, man. If it's a 5x, even more than that, right? But I feel pretty damn confident that you're going to see prices all the way up at $3.17 to $4.42. And if those gains are good enough, and I think they are, I mean, there's nothing wrong with a 4x to a 6x gain, almost 6.5x actually. Nothing wrong with that between now and the end of October, if not sometime in November. Certainly by the end of the year we'll get there. I think by the end of the year you'll even be at higher prices. But if you want to amplify those gains, maybe wait until we're down about 10 cents from here, or at least like 8 cents from here. Not financial advice, not a financial advisor, but it would make sense, right? A higher low there and very tight stop losses, you guys. Like I would think, I mean, really, you don't want to take more than like 5% losses. So and again, with that, if you're using low leverage, that gives you a little bit more wiggle room. I don't know. I don't normally talk about leverage, but just throwing out a play. I don't really do that. But hit the like button, subscribe, take care of yourselves. This is something that I'm thinking about, and that's actually the main reason that I'm making this video, is because I'm like, hold up now. I have a lot of confidence this is going to go to this area after this move. And I actually do have a lot of confidence that we'll see lower prices too. What's easy about this too is if I'm wrong and it moves up, you can catch it on the way up. Again, set those metrics low so you don't get cleared out. But I think if you wait about a week or two, we're going to be at that low area. After the FOMC meeting comes out, that's when we start to move up higher. It makes sense that we're going lower, guys. I got nothing else. Going lower between now and then. Okay, hit the like button, subscribe, take care of yourselves. Bye-bye.